Koto Katoa. Very nice, very intimate. You guys, we've taken away the opportunity for you to act like students and stay back of course to come forward. It's really my pleasure to welcome you to today's event, Trade Resilience, Navigating Global Disruption. These series are a wonderful opportunity to share both the expertise that we have within Lincoln University, but also the connections and inviting people in to talk to our community, but also to our students. As you know, global markets are evolving at a breakneck speed, placing increasing pressure on New Zealand's primary industries to remain both agile and competitive. As a nation heavily reliant on exports, we face mounting challenges, from shifting geopolitical dynamics and climate-driven regulation to supply chain bottlenecks and rising operational costs. This event explores how our export systems must adapt, what it will take to build trade resilience, and the role of innovation and infrastructure in safeguarding New Zealand's position in the global marketplace. To begin with, I'm very pleased to introduce Associate Professor Mark Wilson. Mark leads Lincoln University's work in value and supply chain management, with a focus on building resilience in our primary industries. Today, he'll briefly outline how Lincoln is contributing to this space through research, partnerships, and practical insights that support exporters navigating this complex trade environment. Please join me in welcoming Associate Professor Mark Wilson.
Thank you, Chad. A very warm welcome to everybody here this afternoon. As introduced, Mark Wilson here. I did have a title slide, and the title slide read something like, push a button? Yeah. Hey, there we go. Wonders of technology. Building resilient, sustainable, intelligent supply chains for tomorrow. So basically, thank you for this opportunity to share some insights into our research program here at Lincoln University, one that is firmly anchored, we believe, in real-world challenges and committed to the future of resilient, sustainable, and intelligent supply chains. I head the supply chain management group here at Lincoln. We currently have 5 staff members on the group. There's myself, there's Dr. Jeff Earle here, there's Dr. Robert Radix, Dr. Mohammed Umar, and still with his grease-proof paper on, straight out of the factory from Auckland, well, newest colleague, Dr. Lahuru Gunasekara. So he's not here tonight as well. So our research tackles some of the most pressing issues confronting global supply chains, from food safety risks to climate shocks to technological disruptions to economic inequality, and responds with evidence-based solutions that span theory, method, and practice. At the heart of our work lies the theme of supply chain resilience. One of our flagship papers, Understanding Supply Chain Resilience Through Social Capital, explores how trust-based relationships enable organisations to bounce back from shocks. Similarly, our published research on inherent and adaptive resilience in food logistics identifies how logistics operations adjust dynamically during crises, providing behavioural and organisational blueprints for food industries navigating disruptions. But resilience is not just about recovery, it's also about anticipation and transformation. That's why we've developed frameworks to mitigate food safety risks. We've examined co-opetition in disaster recovery. We've modelled adaptive governance in agricultural systems, and we use tools such as systems dynamic modelling, meta-network analysis, quantitative surveys, and case-based methods to understand the structural drivers of supply chain vulnerability and recovery. A second research theme is sustainability through circularity. Dr. Lahuru's pioneering work on circular supply chains demonstrates how diversified material flows and local recovery systems not only reduce emissions, but also enhance trade resilience. His recent models of reverse logistics, particularly for New Zealand's 6 priority products under regulated stewardship, show how behavioural insights and optimisation can improve take-back schemes and drive new export value for primary industries. A link to this theme is value creation and value capture. Our publication and production planning and control, titled Towards a Unified Theory of Supply Chain Value Creation and Capture, integrates insights across sectors to offer a cohesive theoretical framework of value creation and capture. It informs everything from product stewardship to green innovation, investments under competition behaviours. In the realm of digital supply chains, our ongoing work recently explores how AI is transforming supply chain dynamics. One study investigates how AI tools influence digital consumer behaviour, particularly amongst Gen Zers, while another examines how autonomous logistics systems can support both operational efficiency and carbon reduction in food supply chains. We're also deepening our focus on quality systems and operational excellence. Our research into Six Sigma and New Zealand dairy sector identifies critical cultural and structural barriers to quality improvement, bridging the gap between best practice and real-world uptake in agribusiness food chains. Methodologically, we've developed a wide range of toolkits, from game theory to scenario analysis, systems dynamics modelling, industry surveys to in-depth qualitative investigations. This allows us to provide both the strategic insights and also decision support for industry partners and support policy leaders. Two of our members have recently been principal investigators on the government's National Science Challenge research projects, recently focusing on value creation and capture and resilience of our rural systems. Importantly, our research doesn't just stay on the page, it translates to action. Whether it's informing the Ministry of Environment initiatives on regulated product stewardship, Ministry of Primary Industries on value chain creation and capture, MB on value-adding exports, and advising on food beverage exporters on resilience, or supporting regional recovery strategies post-disaster. We've become embedded in New Zealand's future-focused supply chain transformations. So as we look forward to 2030, where's our research going? Well, we believe we're well positioned with our capability to lead in three key areas. First one is operationalising resilience and sustainability in supply chains. The second key theme would be leveraging digital tools and behavioural insights to enhance supply chain performance. And thirdly is the co-creation of knowledge with industry and government to ensure solutions are fit for context and fit for purpose. So thank you for this opportunity to share our research group's journey so far and what we intend to focus on going forward. So we look forward to a conversation at the end where we could actually catch up and possibly start some collaborations going forward. So that's where we're at the moment. Thank you for this opportunity. So I've only been asked to speak about 5 minutes, I believe that. So that's it, I'm done. And I hand over to someone you really want to listen to. Graham.
Yeah, no, that's fine. Just a quick introduction to Graham. It's my pleasure to introduce Graham Sumner, Chief Executive Officer of the Lyttelton Port Company. Graham joined LPC in 2023, bringing with him a strong track record in leading complex infrastructure-heavy organizations. Most recently as CEO of Airways New Zealand. His experience spans sectors from energy to telecommunications, with a career that has delivered high-impact leadership in both public and private settings throughout Australasia. Today, Graham will speak to the role ports play in trade resilience, how Lyttelton Port is responding to supply chain pressures, increasing demand, and the sustainability imperatives shaping the future of freight. His leadership is helping future-proof one of our most critical export gateways. Welcome, Graham.
Thank you. Thanks for that kind introduction. I'm always fearful of presenting to groups like this because I'm always left wondering if there's anything new I'm going to be able to impart to you. So I always like to start these things with some up-to-date trade statistics because I know you don't know those and AI can't quite tell you yet. Delay. Also, in terms of how we should do this, I think it's a nice group. If you've got a burning question, just yell it out. Let's make this a town hall conversation. But if I have a slide coming up, I'll point out that we might deal with it in a later slide. So look, what we're going to do, I think we'll start with just a little bit of an update on what's happening right now before we get into some of the challenges that we face, and most particularly what some of the solutions that we think are appropriate for where we sit now in New Zealand. So these are up to date. This is what's happening in the South Island or in Littleton right now as of May. So what we can see is that the container volumes are flat. And perhaps the only thing that I would really want to draw your attention to is you can see that our farm is going gangbusters. And if I draw your attention to the right-hand side under general cargo, we thought we would see about 140,000 tonnes of grain stock feed this year. And you can see that that is almost double, reflecting a couple of things we think. One, obviously, the dairy price and so forth. And so naturally, you see that cycle of reinvestment that goes on. We have been alerted to the view, though, that land use and the way that people are wanting to use their land is pointing to more stock feed coming in and replacing grass, while still maintaining the brand of being grass-fed because the yields are better. That's what I'm hearing. There'll be experts here who can either confirm that for me or later, but certainly that's what we're doing or hearing. And that's part of a 30-year view that we're wanting to now take on where the port goes. As part of our 30-year master plan, we're hearing that kind of feedback. And anyway, that seems to be reflected in the numbers. Before I got here, I managed to get a hold of Charles Finney. Now, Charles is the chair of NZTE. I managed to get him when he'd landed on the. He's in China. They're going to China with the Prime Minister at the moment for their trade route. So anyway, I got him in Cairns, and you'll be pleased to know the 757 managed to get to Cairns in one piece. So we can all celebrate that, and they're refueling and they're on their way again shortly. But he has confirmed that looking at the latest trade stats, they are up. So, one little green shoot seems to indicate that we are seeing across the board, Middle East, US, Europe, trade volumes are in fact a little firmer. And we are probably seeing a bit of that, particularly on the back end of what has been a late export season. So we continue to see some potential upside going into the new year. So there we go. That's the one piece of information that you won't have seen before. I'm afraid it's all downhill from here, but we will try and add some flavour nonetheless. Now, unless you've been living under a rock recently, none of this will be news to you. But nonetheless, we can't have a topic like this and not at least talk about these things and essentially what's been happening. And more particularly, I've got some slides on what that has meant for us locally and some of the things that we need to think about, and of course the inevitable conclusions as to how we should respond to the extent that we can. So obviously, I managed to, when I put the slide together, I gave this presentation a few months ago, and some of those, unfortunately, those pictures on the right haven't changed, of course, because the Middle East. I did manage to stick the one in below, obviously, in terms of what's happening in the Red Sea right now. Of course, with the latest debate being whether or not the Straits of Hormuz will be affected by the current war and what that'll do to the oil price, and ergo what will happen to shipping costs as a result of that. Who knows? I certainly don't. I'm not a geopoliticist, but we monitor these things, and we monitor these things mainly because of the impact that it has. And if you see this this map here, you'll see that, of course, whenever there's conflict in the Middle East, this has a tremendous effect on the supply chain, and we can see that through some of the costs and some of the capacity that it soaks up through the shipping network. And I'll talk about that a little bit more in a minute. Economic instability, I think, speaks to itself. And we'll talk a little bit about the Trump trade in a minute and what that means for us or what we think it means. And technological advancements, labour disputes. So I don't have a slide on this. So the one on the right there you can see is the protest that went on the east coast of the United States. I think it was around 3 or 4 months ago now. I might correct me if I'm wrong, Simon. I should have introduced my colleague here, Simon Munt, who actually put together half these slides. And Simon's the head of commercial. So every now and then, if I forget what I'm talking about, I'm going to lob him a question to help me out. But on the right-hand side there, what you saw there was a protracted strike on the east coast of the United States. And what that was simply about was labour unions protesting about automation and progress, and essentially automation coming in and taking their jobs. And it won't, again, escape many of you that ports have not really been at the forefront of labour productivity and sort of dynamic environments delivering value. They're often monopoly environments. They've often been unionised and operating in a very traditional way. So it's quite a challenge, both here locally, but also globally, to make progress in terms of automation and productivity gains. And it's what's very interesting is there's a book called How the World Ran Out of Almost Everything. And I'll remember the author's name very shortly. But what's very interesting is when you look at the United States and the labour models that they have here, one of the real leaders in that area was an Australian fellow who went over to the United States and he organised the West Coast labour unions. And they very much mirror to a large extent what we still have at Littleton Port today. So that's how that has evolved. And we were debating whether to still talk about the pandemic all of these years later. But the reality is, even to this day, there's echoes of that in terms of how that has permeated supply chains. And you'll see a chart in a minute which still talks to the volatility that very much commenced around the time of COVID. So we'll get into these ones a little bit further. Let's talk about the Suez Canal first, because that map that you saw previously, if we just go back to that previous map, and you can see now what's happened here with all of these ships going around the Cape of Good Hope. Again, a number of you may well be familiar with the importance of the Suez Canal. Why we pay a particular interest in it, of course, is because of the flow-on effect in terms of costs of containers, the availability of ship capacity, and ultimately the services that are and aren't made available at times to New Zealand. And what we have seen in the past, we saw it through COVID, and we've seen it from time to time, is, of course, suddenly services are not available, they are constrained, they sail past certain ports and onto other ports. And all of these things remind us of the somewhat fragile nature of our position at the end of the world. So we know 12% to 15% of all worldwide trade goes through the Suez Canal, and you can see those other stats there. The important point probably to note was at times when traffic comes constrained, it really soaks up with the shipping capacity that was available. That wasn't too many years ago when we were forecasting that container prices were really going to drop, because everybody was building new ships and we were very excited about the fact that our customers were going to get better deals. And then Suez came along, or I should say the Middle East conflict came along, and it soaked up all that additional capacity. So that 20% of excess capacity is merely weighing its way around the Cape of Good Hope, and it takes an extra 10 days to 2 weeks to get stuff to market, and of course that essentially now fills in the supply chain. So that unfortunately has some ongoing effects, and again, there'll be a fair few people with an economics background. You don't need to be an economist to work out what that does to price generally when you have that constraint. The Trump trade, you know, I really wish I could do a whole presentation. I didn't have to mention this fellow, but he just keeps coming up all the time. And I guess what our concern would be, and still remains the case, is that although things seem to now with China have got back to almost kind of where they started from, you know, I mean, it's been one of those ones where we've essentially navigated our way back to essentially, yeah, I mean, nonetheless, the point being is that if we settle on those numbers, then of course we are nonetheless operating at historically very high rates compared to where tariffs have existed previously. And the concern, I suppose, is what are the flow effects on particularly for primary goods that are exported to China that may well have otherwise been then on-sold to the US. So what does that secondary effect look like? To date, at least, it doesn't seem to be as bad as what we thought. But there are a number of things that we are, I think, still waiting to find out what the outcomes, you know, will be. One of those, for example, are logs. So we know that the US at the moment are going through a review on log tariffs. That's going through a normal process, and we won't know the outcome of that until about November. But that's one of those issues that may arise. And the worst case scenario is we may see a 20% or 25% tariff on logs. It may not happen. But the point is there is that continuing uncertainty out there. And certainly if you're an investor in logs, you're kind of looking at that, and not that you can suddenly convert trees into some other form of investment, but you know, it's really taxing you in terms of the uncertainty that sort of thing is creating. there's a breakdown there you can see on our exports to the US. The other ones, of course, that we pay attention to, wine. About 30% of exports, New Zealand's wine exports go to the US. The word on the street is that the 10% tariff that they've picked up essentially has been split between the importers and the exporters in order to ensure that at a retail level, consumers are not paying any more, which demonstrates a real sensitivity to retail price on wine sales in the US, but that they're managing to absorb it. But we have noticed some uncertainty in terms of investment going forward in the upper South Island. There were certain things that Simon and I were looking forward to seeing happen, which we're now told are on hold whilst people reassess the situation and determine whether things are stable. And that's the ongoing thematic, isn't it? And that's the real problem we face. It's the uncertainty. We don't know what's going to happen next. I was at a presentation where a colleague gave he actually had to put it in fairly fine print. He had a whole page of all of the changes that President Trump has announced in relation to the US tariff policy just since since Liberation Day. And I think there were 52 at that time separate announcements and changes in what was going on. So you've got no stability at all in terms of making your ability to make decisions. So that's as much as I want to say about that depressing subject for the now. A very important point to make in context of what we're dealing with are the changes that we've seen in global shipping since 2010. And since then, you saw a lot of mergers and acquisitions. And frankly, you saw a much tougher stance being taken by shipping companies in terms of how they've conducted commerce and their willingness essentially to move capacity around it very, very quickly, essentially to follow the money, to go wherever the best money is. And you can see, and I talked about this earlier, about what's happened in these last few years, and this is the up-to-date 10-year container spot prices. And we've talked about what happened in COVID, and we saw this long period of stability. And then since then, you can see that volatility. Now, Simon and I were in Shanghai, and Simon stayed on one day longer. We were talking with Costco and our other shipping partners up there. And in the 24 hours before I left him from Shanghai to go back to Singapore, and when he then decided to take off, container prices went from, correct me if I'm wrong, Simon, $6,000 to $16,000 on the spot market overnight. And of course, what that reflected at the time was that suddenly everybody wanted to get their containers to the US to take advantage of the 90-day window that was available to them whilst China and the US were negotiating, the new tariff rates. So the rush was on. Now, the impact of that, and to sort of demonstrate what I'm talking about here in terms of, frankly, the ruthless efficiency that shipping lines now operate, was they just said, well, we'll grab capacity from anywhere because there's a lot of money to be made in a short period of time. Now, in this particular case, that came at the expense of Australia. So they just took a bunch of risks and said, well, we're not sailing to Australia this week. This is now on the US-China run because we have to take advantage of that spot. And so there were sail paths and capacity was not made available. We happened to be lucky because our ships, the ones that were being provided by Costco, were already in circulation and couldn't be turned around. So that's how we roll these days when it comes to the market. I always thought, actually, when I came here after Airways, I thought, shipping not very dynamic, not much goes on. They're not very nimble, and I've been proven hopelessly wrong. They are as ruthless as any other competitive environment I've worked in. And so the pandemic, the Red Sea crisis, saw this nimbleness we've talked about being deployed. And the point being here that New Zealand risks service stability and capacity issues if we're not putting our best foot forward. There will be always some things that we cannot control, but it does invite us to think about being as responsive, as service oriented, as you can see, I'm already building the case for the slides that are coming up. As efficient as we possibly can. So the question is, what can we do about this? There's many things, of course, that we as an individual company and we as a country are unable to do. The winds of change are definitely blowing. The geopolitical stuff, as you say, we monitor it, but there's very little we can do. So look, our ambition has to be that we've got to be as inviting a place to do business as we can. We've got to have the right level of scale, I think, to encourage the ships that are going to be built now to come to New Zealand. There's a sense of, I think we got the last time, Simon and I, that the game is up. Game is up. We cannot continue to operate in this very fragmented way, but this small market at the end of the world where 10 ports between them share about 3 million containers. And I know, and I was drawing my colleague, drew my attention to perhaps the unfair comparison with Singapore, because after Singapore's 30 million units are in fact, they're configured quite differently. They are a transshipping environment. But nonetheless, 10 ports into 3 million containers just doesn't go, right, from a geographic point of view.
In Singapore this year, I think they're putting out their ports and our ports, and I think they were rather dismissive of the whole infrastructure around them. Yeah, maybe it's not fair, but it was a very notable thing they raised about how what's going in our ports.
Yeah, they're very polite, aren't they, when they say it? But I think dismissive is an accurate description. Quaint, there's a few other of those really folksy words one could use, but none of them are kind, really. So I would agree with that. You go to those ports, you just simply see the scale, you see the automation, you see all of the things that we should aspire to, albeit bearing in mind our size. But that is the problem. And so you can see this current network where you've got, I guess, this mixed arrangement. Some direct sailings, in some cases, in Southland, for example, MSC, that's an MSC port, so they sail in there. You've got the likes of Timaru, Wellington, which is subscale, even Otago. And Kevin Winders, my colleague down there, this might be when I say this, but the reality is that Otago's container volumes have been roughly static for decade or more. So there's very little growth there. That's just the reality of it. And we've got to say, well, look, okay, if we think about what shipping companies are doing going forward, well, we all know that they're building larger ships. So the ship of the future that we're going to have to cater for is probably at least a 7,000 TEU, 7,000 container ship, not the 4,000 and 5,000 that we're dealing now. It's probably going to be alternatively fueled going forward. And we're going to have to be able to cater for potentially from time to time those really large ones, the 12 and 14,000 TEU ships. Because there'll be occasions where you'll simply want to run a blue water route between ourselves, Tauranga, and Auckland. And you're going to have a facility that's capable of doing that. That's what they're expecting. And that needs to be our response, we would say, if we're going to be an inviting place for multiple shippers to come to encourage competition, but also to gain efficiency. So that's our ambition. To which, now this is going to work, right? Now, how's it going to work exactly? Hit this one? Yeah, I'm just going to show you next. Is it on the next slide, is it? All right. What I'm going to show you here now is a 3-minute video shamelessly promoting what we would like to do next. And that is, you'll see shortly, an expansion of the port in aid of our ambition, but more particularly to talk to essentially addressing what we consider to be the South Islands and the national interest in developing scale to meet the needs of our clients and to ensure that we're not forgotten or dismissed as a result of continuing to operate in what we would argue is a subscale way. So you're saying that one? Yeah, there we go. All right. Am I going to be able to get some volume? There we go.
The South Island's largest international trade gateway. PVC facilitates the movement of billions of dollars worth of imports and exports every year. We're proud to take Canterbury's goods to the world. We sit at the heart of a growing hub and spoke model, with cargo arriving from both coast and rail to transship to larger vessels for international export. We exchange over 400,000 TEU every year through the Littleton Container Terminal. We continue to invest in infrastructure to support the South Island's economy. Our eastern development has expanded the Littleton Container Terminal and boosted capacity to 550,000 TEUs per year. We've added new reefer towers, new truck receival and dispatch lanes, and a new straddle workshop. As part of the South Island Hub strategy, Kiwi Rail has invested in 47 new state-of-the-art low-emission locomotives, supporting the growth of the rail freight network and enhancing supply chain reliability and resilience. Littleton Port Company is now focused on future developments. The Te Araparahi Bay Reclamation Project is currently underway, an important initiative for the port and the wider Canterbury and South Island economy. The expansion aims to develop a deep water berth to accommodate large container ships in the future. Stage 1 involves a $50 million reclamation project to create a 7-hectare site to support the future development of the deep water berth. Expanding port facilities is essential to meet the growing demands of New Zealand's supply chain. Stage 2 is constructing a new 380-metre berth to accommodate a 15,000 TEU vessel serviced by 3 cranes using the latest automation technology. It will also see the automation of operations of the landside terminal, ensuring efficient operations. This is a capital investment of $850 million. The project will enable Littleton to handle up to 850,000 TEU per year, accommodate the largest vessels visiting New Zealand, solidifying our position as the South Island's main hub port. We're taking Littleton to the next level, delivering customer excellence while maintaining a safe, sustainable, and profitable port.
Okay, so that's my pitch. So anybody who's willing to make a contribution, feel free to put your hands in your pocket. So where that's at the moment, for those of you who have been out to the port, you'll see that the first part of that enclosure is almost completed. That 50 million comes off the balance sheet and is funded by a levy that we are putting on shipping things. The 850 million is the subject of discussions now with the council and with Christchurch City Holdings, because obviously they don't have that money handy. And of course, now we're into the political realm of whether or not they can accommodate capital recycling. And unlike some councils, at least Christchurch, you can say is asset rich, even if it's cash poor. So there is the prospect potentially of selling other assets to support that. Depending on which council gets elected, I think in October, will also then determine whether other funding arrangements can't be made available. There is no shortage of funding opportunities, things like ports. So we don't lack those opportunities. It will come down to essentially how people feel politically around the ownership remaining with the council, or whether other parties may be considered. From our point perspective, though, we see this as absolutely essential. The counterfactual is to not do it and then essentially see the South Island become constrained. We don't really see it too many other alternatives that present themselves. And of course, the reason for that is that the other ports are subscale, they're in the wrong areas. And essentially what happens is that you have to recognise that Littleton Port already has 80% of the imports coming into the South Island. And so in order to run a balanced trade, it's really the only place you can put it. courtesy of the earthquakes, of course, we also happen to be the only port that has the consents to do it. And consents these days, when you're trying to do anything in terms of port infrastructure, is like gold. So that concludes the presentation. I'm conscious that I have in other presentations included something about AI, because I normally get a question or two about AI and automation. So I might preempt that by just talking for a couple of minutes about what we imagine that project to look like. And you heard the presenter talk about automation. So what's very clear is that the council cargo owners and the like, all of our customers are very much pressing for an automated terminal. There's a few reasons for that. The main one from a customer standpoint, of course, is predictable outcomes. So what they want to do is come in on a window and get a predictable outcome and know when they're going to leave without any of the labour variabilities or other things that can come about from more manual operations. From our point of view, on top of, we think, more predictable and safe production, of course, comes all of those other benefits that we would say arise from automation, which have been the case really arguably in other sectors for 20, 30, 40 years. Really all that's being promoted here, I would argue, is the sort of industrial automation that's been commonplace for a long time and for which ports are now only catching up on. In terms of a specific AI overlay, if you'd asked me 6 months, I was asked 6 months ago, and I didn't have much to say on the subject. I think in the last 6 months, we're now starting to see real impetus. Still trying to sort out, and I can look to the experts around here, hopefully for inspiration. I'm still trying to sort the wheat from the chaff in terms of determining, where AI is going to be most impactful. But I do, I do not doubt now that we're going to see it really make its presence felt, probably in first instance by being embedded into many of the systems that we use now. And then what I'm really looking forward to, of course, is far better efficiencies around international trade flows, far greater levels of visibility, and I think better, capability for us to make decisions in terms of knowing what product is going to come, when it's going to come exactly, and therefore what our productive response needs to look like. So that's a little bit of insight into where we see AI, and the experts certainly are predicting over the next 5 to 7 years that that's really going to make its impact felt in our area. In the meantime, for us, it's very much more about machine learning and sort of the more traditional automation, which we have yet to fully embrace, and we're going to get some obviously step changes as a result of that. That's a little bit about AI. All right, so I think that sort of is a bit of a thumbnail from me in terms of what we're doing, but I'm happy to take questions on that or anything else. So,
Graham, New Zealand and the rest of the world loves trucks on the road. New Zealand roads hate trucks.
they do.
Is there any chance we might find sustainable coastal shipping, and how would Liverpool fare with that?
Boy, oh boy, what a question. So one of the things we did when Simon and I were away was, of course, went and spoke to our coastal shippers in Singapore. I mean, I hope so, but I have to tell you, based on my last experience, it was a bit gloomy. We got a lot of ums and ahs, and I think it comes to the point that was made earlier. It's not a huge, worryingly, it's not a huge focus of that many people to come and provide solutions for the coastal shipping. Swire are probably the ones that, at the moment run the Moana Pacific and the Moana Chief. Is that right, Simon? And right now, the conversation was really about getting a second one back en route, because we're worried the Arateris are not going to sail anymore, and we need to find 20,000 containers that need to find its way somewhere else. And I have to be honest with you, there was a bit of head scratching and not a lot of focus from Swire. The government has a $30 million subsidy that it provides for coastal shipping. That was really badly spent last time around, and we would hope it's directed better this time. But this is all fairly short term, and it's difficult to see, and there has not been, I would suggest to you, from the government, a longer term strategy as far as coastal shipping is concerned, and I haven't seen any evidence of it just yet. The 30 million is back again this year. We've certainly suggested that it could be applied better than it was last time, but it still relies on somebody, Swire or somebody else, stepping up and providing that capacity. And we need it because, as I said, the Aratiri is I mean, what we would say is, we need a multimodal solution. We definitely need to see rail. Rail's not going to do the job in all cases. Although I would have to say, you notice we put the trains into our promo. That was for two reasons. One, because it actually spoke to a truth. It was actually we are going to, in the South Island particularly, benefit enormously from that investment. And secondly, Shane Jones likes to see, I mean, one has to be politically sensitive and give kudos when it's due. And it's certainly for the South Island, it works. Elsewhere, though, if you don't have coastal shipping, we know we don't have a solution, and we are too reliant on trucks and with the emissions profile that goes with that and so forth. So that's where we're at. So I'm sorry, that's not quite the answer you were hoping for, but probably the one you were expecting. Yes. Yes, ma'am.
Hi, thanks for the presentation. I can see you reading. I was just curious.
Yes. Yes. So the question of resilience is an excellent question and one we get asked about a lot. So I'll deal with that in bits. The good news was during the last earthquake, nothing moved in the tunnel. It's built under granite. It was a really marvelous piece of engineering in the 1960s. So we took a lot of confidence from that. The second thing, of course, is what we're advocating for is to increase resilience because of this wharf here, of course, will be built to withstand tsunamis and earthquakes. It will be engineered to a much, much higher standard than what we have now. Sad news about Littleton is if we get another little shake, even a little one, this existing infrastructure over here, if you look back through here, this bit here, won't last. So I guess what we would say is by building this, we are increasing the resilience, albeit against a fairly low bar, because some of those wharves there are no longer insurable. They're uninsured, actually. So Christchurch is not in great shape. I would also suggest to you that the major exporters will want to keep Otago going. It's not going to all sit around Littleton. And given rail and given the power of the locomotives that we now have on offer, there will be a backstop in terms of Otago. And I think that's how they're going to think about resilience. I think Timaru is strategically in trouble from a container point of view. As a cargo, and I think Phil Melsop, whom I know, is a great bloke. I mean, he would say, I think, that they're futurising in terms of other cargo because, whether it's logs or those, you take those to your nearest point and it's a point-to-point service. But as a container port, it's kind of, I know I love Timaru. I know, and I'm sorry, and so I don't mean to in any way disparage Timaru, I promise you. But it is a bit of a one-horse town. It relies on one shipping service and essentially is underpinned by the local Fonterra trade. So it's yeah. Elsewhere in the North Island, of course, you'll have resilience because I mean Auckland Tauranga are going to. It's an open question around Wellington, I would suggest. There's no obvious reason to have a container terminal in Wellington, really. And I'm not biased. I have no skin in that game. But I think if you were to ask the major shipping companies, they usually talk about Auckland, Tauranga, Littleton, and Otago. And as far as resilience is concerned elsewhere, I think probably the only other thing that I would say is that with the automation side of things, if there's probably one other thing that we do think about a bit, it's our demographic. There's a lot of people who come down to the wharf who in their 50s and so forth, who work those later years on the port. But I would also argue longer term, it's not an attractive role for younger people to come and make a career of in its current form. And if you want to build longer term resilience, you've actually got to make jobs that are interesting to people who want to, work with automation. And also I would suggest to you who want engineering careers and things that are involved with new technology. So I think there's quite a strong argument to be made for automation in terms of creating the jobs of the future. There was a,
Yeah, I
Yes.
pretty much answered.
did I?
Yeah, because I was really thinking, you mentioned Shane Johnson regional growth, and then on it's like the antithesis of that, if we're going to start sort of centralising around. So you've sort of answered that. In terms of it's more that political pressure that they have to be looking at not being, big city centric. Yeah.
They do, and we see that all the time. So
It's unlocking those funds that you need is what I'm meaning.
yeah. So what we've said to Shane and to Minister Peters and so forth is look, the way to have regional growth is to make sure that those arterial routes, rail or particularly rail, are available so that, and that those people can then get their goods to market efficiently. I mean, if you took the example of wine at the moment, if you're producing wine in Blenheim, you truck it over to Nelson, transships, it goes on a feeder to Tauranga, I think, and then ultimately to the market. What we would propose is stick it on rail straight to Littleton and then straight to market and take 2 weeks off the supply chain. And your emissions profile looks a bit better as well. And that promotes regional growth because it makes it cheaper for those people to take the stuff to. So
Good. A couple of questions, if you don't mind being
Yes.
but
no, this is
on your first slide, just interesting on the increase in feedstuffs. Do you have a rough idea how much of that was PKE? Do you know sort of proportionally? I mean, I know you might not have the stats.
I'm going to ask my friend over here, Simon, because it was a lot of it was PKE, wasn't it?
Very hard to get the trade stats sometimes. The dig at that level to
Yeah.
match the years.
Yeah, but we could let you know, but PKE was a big component of that. Yes, it was.
Very interesting. And like you say about maybe changing growth away from pure pasture is interesting. Just on the automation and on your last point, a couple of questions go. How labour saving do you think it'll be in the pork industry? We know some other cases where there's great promise and it ends up you just switch careers rather than overall get massive amounts of labour saving, maintenance and upskilling people to use that. What's the sort of hopes? And you've probably been able to look to other places that have implemented the technology. So what are the hopes of automation around that, would you say?
Yeah, so this is going to be a controversial one because, of course, politically, some of the councils and so forth are aligned with labour unions, and of course, as I pointed out on one of my earlier slides, a lot of them are opposed to automation because it does take jobs. It has everywhere else. You wouldn't expect ports to be any different. Our guess conservatively is that you probably need about half that. So we've got 290 people who are involved in the container handling side of things. It seems to us that you could do about twice as much with about 140 staff or thereabouts down the track. We've heard some very extravagant claims. With Simon and I were talking about DP World, who are doing an automation in Sydney, and they're claiming that they'll take 700 staff and turn them into about 68 or so. We're a bit more cautious as to where we might land. But inevitably, you do not need people to drive cranes. If you watch an automated crane operation, you've got somebody in the control room operating it with a joystick. The intelligent systems are feeding automated cranes in terms of where it's positioning, the containers, so you don't keep driving around manual straddles anymore. You still, unfortunately, have to have people to take out the twist locks. Nobody's come up with an automated solution for dealing with twist locks, unless is that a piece of research that I can rely on Lincoln to. If somebody comes up with that, I tell you, you'll be really onto something. But aside from that, yeah, we would see. And of course, unfortunately, the labour models that operate on littleports are inherently undervalued, just compared to it's sort of a true private enterprise equivalent where you've got competitive markets.
It's a difficult trade-off between we want to be high-tech, but at the same time, we've got the humans want to.
Well, look, it is, and it has been an issue for course. I think one of so.
Thank you very much for your presentation. You talked about alternative fuels.
Yes.
Potentially in the future.
Yes.
How many of the vessels that come into Littleton port at the moment rely on your service to be actually refueled? And what type of alternative fuels do you think that people are thinking of in the future?
Yes, I can answer the second one, but again, I'm going to look at. Please, you turned up, Simon. Do we have any view on how many of them are relying on our bunkering? Yeah.
Within your future development, you're basically making sure that you have space for the alternative fuel.
That's right. So with GHG, we're doing a 30-year master plan at the moment. We know that the current fuel terminal has about a 10-year life in terms of certainly the wall structures and so forth. And then we're going to have to look at what sort of buffering we should provide. Current favourite, of course, is LNG, probably. That seems to be where more people are investing. We've seen methanol also used. We've seen some ammonia trials. And Maersk, bless them, even raised the prospect of nuclear. I'm not sure that one is going to have a lot of customers, but that's the challenge, right? Which fuel do you bunker for? And we're still, I guess, assessing which way the global fleet is going to go. But we are thinking in our plan in that 30-year window to make provisioning for at least one of those alternatives.
Brian, is there an independent and reliable assessor of port efficiencies around the world? Where would Liverpool be?
Oh, what a question. I'm so glad you asked that because I otherwise would have forgotten to mention it. Well, yes, we would say yes. The one we rely on, of course, is the World Bank CPPI index, because that measures total ship turnaround time and tries to take account of the various sizes of ships that you handle and the average exchanges. It's not perfect, but it's pretty good. It's pretty good. And it globally, and you can go online and have a look at it for those of you who don't know. I suspect you know this question. You've just given me this one as a friendly, so I'm grateful for the question. And so we have focused on that, and I have spoken about this publicly in the media. When I arrived, Littleton was ranked 385th out of 405 ports. By the way, 405 is last, it's not first, just so we're very clear. So we were sort of akin to Sudan, I think was next door to us. On one side, I can't remember who was other. There were a couple of notable worse ones than us. LA was worse for so long. California was worse, and I think Cape Town was another one which was bad. But the rest of them are not the company that we would choose to keep, really. So 385th out of 105. We monitor that on a monthly basis. We think that we're now in the 190 to 210 mark. So we think in the last year we've gone up about 180 or so places, and we've been advised that we have been a strong improver. But I'm told now that those stats won't be out until about August. They're running later this year because they're trying to process more data. So that's the one we rely upon. I mean, it has its elements that are tricky, but unfortunately, I think it does paint a picture of New Zealand port efficiency. You'll see all the ports in there. Ironically, the one that does best or did last year was Wellington. Having just said that, I don't think it's probably got much of a future. At least what it does very efficiently. It just doesn't make any money because it's sort of subscale. So we'll see what the numbers look like this year. But look, as a general concern, I think we've seen a reduction in productivity in Auckland and Tauranga over the last couple of years for various reasons. And we've got to have that conversation around productivity and how we make sure we turn the ships around on time. When you look at Australian ports, just since you've got me on the subject now, they're also not great at all. And that partly speaks to the way they're organised. You see, Littleton, we're responsible for the end-to-end service. We run the marine, so we are accountable for that. One of the challenges is that you have when you split land ownership away from stevedoring, away from marine services, is you're now relying on three different organisations to collectively work well together to produce a total turnaround time for the customer. And the evidence, an area of research I would suggest, but it hasn't been looked at, would be whether those models are in fact, delivering the sort of services that customers expect. So if anybody wants to do that, please, I'd be a very interested observer of that. I certainly have my doubts that from a customer standpoint that it's delivering what they want in terms of performance.
Thank you. Graham, fantastic presentation. Really enjoyed that. Can you join me in thanking Graham for?
Thank you.
So before we break, we're going to give you your own bottle. Everybody else has to share one.
Thanks very much.
Thank you very
Thank you very
much for
much.
that presentation.
Appreciate that.